Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I am here to bring you the market wrap up for the week of July 3rd, 2023, ending on July 7th. Last week was actually an abbreviated trading week. The 4th of July holiday, of course, was in the middle of that. So last week there were only 4 trading days. Um, in terms of the battle plan for today, for the next few minutes, here's what's going to go on. We will take a look at the SPY and the Qs, look at the IWM, the Russell 2000, as well as the TLT bonds, and we'll kind of look at their relative performance for the last week. We will then move on to the major industrial sectors, the 13 major sectors that people look at, and we'll take a look at those and look at sectors of relative strength and relative weakness for the past week. And then we'll also look at those in the context of the rolling month, which is basically the last 25 trading days. So we'll look at again for the last week, and then and as well as the last the rolling month. And then lastly, we will actually look at the SPY and the Qs, and we'll take a deep dive into the charts and identify areas of support and resistance, and in particular look at areas of supply and demand, which is the basis for how Precision Trading Labs approaches trade construction. Generally, we're looking for areas of demand where there was prior bullish activity, and we're waiting for retracements back to those levels in order to express bullish trades. And similarly, for bearish trades, we'll be looking for areas of supply, which were former areas of energetic downward activity, in order to then wait for retracements up to those levels, and we could then express various bearish trades out of those zones. So that's what we'll be doing today for this video. And then in an accompanying video, in a separate video, we'll then actually look at a few other symbols. So we'll take a look at Facebook and Amazon and Tesla and a couple of other symbols there. So that's the game plan for today. Before I go on, the ubiquitous disclaimer: Precision Trading Labs, we are not financial advisors or fiduciaries or broker dealers. Everything that we provide is for informational and educational purposes only. So let's get to it. If we take a look at the week last week, here is a percent change chart for last week. And so this is the close on the 30th, and then here is last week. Again, there were only four data points here rather than 5 because of the 4th of July holiday. And so we could see right here it was a moderately or a slightly down week for the equity markets here. The Qs were down just a little less than 1%. The S&P was down just about 1%, and the Russell 2000 was about 1.33% down. So obviously a slightly down week. And then the bonds, because yields are pushing up, the bonds are actually were actually down about 4%. And in fact, if one goes back in time, there's actually there were actually some demand zones that we're finding for the bonds that we actually haven't seen for quite a while, because of the fact that yields have been pushing up, to essentially kind of historically high levels as compared to what we've seen in the recent past. So that's the story with the broad markets. If we now move over to the sectors, so here's the last rolling month, the last trading week for the sectors. Again, this is the percent change chart. So here is our close on the 30th, and so everything, of course, is keyed to this. So here's our zero line right here that everything originates from, and so we can see right here. Basically, of course, here's the SPY down about 1%, as I showed you in the other chart. But here are the sectors of kind of bare relative strength here. Obviously, nothing is really strong here. Real estate was up about 1/3%. And communications and retail were up a scant amount. So these are really more or less break even, and then everything else contributed to again the 1% loss in the SPY. Okay, so in particular though, if we look at the relative weakness here, we can see healthcare was by far the weakest sector, down about 3% or so, and then we could see materials were down about 2%. And then there's this cluster again, really all these in the middle, and even the ones that technically are sitting on top, we really may as well just kind of almost consider everything, this cluster here, almost just more or less, pretty close to break even. These are everything here is between up 0.3% and down 0.4%. So I wouldn't really characterize anything in here as truly relative strength or anything that's strong. One thing I do want to point out though is if we go back to the prior week, if we notice, right, healthcare is here, down here, and if we notice real estate was up here, if we go back to the prior week, we can see right here, real estate was actually up, but this time, a truly healthy amount. This was up about 5% last week, and the transports and energy were also up a similar amount. And of course, last week was a pretty robust week overall. And if we notice right here, healthcare again was relatively weak. And in particularly, that's a great deal of relative weakness here. If we compare what the broad market was, and particularly what some of these other sectors were. So in a sense, 2 consecutive weeks, healthcare has been particularly weak. So what we would be doing in terms of looking at potential trades is we would be looking for symbol, first of all, look at the XLB chart itself to see if there might be a trade that we could put on that would capitalize on that weakness. And particularly what we would be doing is looking for a rally up into a supply zone in order to then express a bearish trade. And of course, expressing a bearish trade could be shorting a stock. It could also be buying a put, or of course, then one could also use a couple of different option spreads, either buying a bear put vertical spread or selling a bear call vertical spread in order to collect premium. And so in essentially, those are all various ways that one could express a bearish trade, let's say in terms of the weak healthcare sector. Okay, so that's the story with the rolling week. And again, on top, real estate was on, again, for 2 consecutive weeks, was kind of right at the top. But in both cases, it was, in one case it was up a lot, and then last week it kind of took a breather. But nonetheless, on a relative basis, it was relatively strong as compared to really, the rest of the market there in a down week. So that's the story with the rolling week. If we then move to the rolling month, we can see though, kind of a different story on top. But what I do want to highlight though is also for the rolling month, notice what's sitting at the bottom. Healthcare is again sitting right at the bottom. So this is really showing not only for the last couple of weeks, healthcare being weak, but also for the last rolling month, which again, I characterize as 5 weeks. So that's the story here. The other thing I do want to point out though is, obviously there's still a lot of uncertainty about this market, and some people would say, in fact, that the way the rally, the general sense of optimism that we've had the last few weeks has been kind of misplaced and almost like whistling past the graveyard, and that may very well be true. But looking at this from a kind of a sector. Through a sector lens, and in particularly in the context of sector rotation, if we noticed down here, utilities, staples, and healthcare, these are all sectors that generally tend to do well in very bearish markets, and they in fact tend not to do as well in bullish markets. And so if you notice, these are all sitting down. So this kind of reflects the optimism, that's the general optimism that's in this market. Whether it's valid or not, or whether it's misplaced or not, is an open question. But in terms of a sector rotation thing, it is kind of fascinating to see that for the last rolling month, these 3 defensive sectors are all actually the worst of the 13. And so it's just something to keep an eye on there. And then on the top, notice consumer discretionary. Again, consumer discretionary tends to be generally do well in sort of more optimistic times, and that's kind of sitting right at the top here. So again, this is kind of a reflection of what I'm talking about here in terms of the sort of the bullish outlook that some people have had, and in a sense, some of the results that we've seen. Again, that could all unravel at any time. but this is all supportive, at least, of and sort of evidence of what we've seen in the last few weeks. So I figured I would share that. So if we now move on to the live charts here, um, here's a chart of the SPY. So here is where we actually closed on Friday here. Let me just spread that out a little here. So this is a 2-hour chart, the 130-minute chart. So we can call it a 2-hour chart. So this is where we closed here. So we closed at around 438.5. Okay. And so if we're looking at potential trading levels here and either levels of support and resistance, and particularly what we really care about, which are these levels of supply and demand, right here, this was an area that had gotten created at the end of June. And this was an area of demand here. And so notice price came up, and let me just blow this up a little bit here. So notice price came up, rallied there. We had a very bullish candle. Notice this indecisive spinning top. And then we have this bullish candle. And of course, this is also a candle though that essentially kind of traveled a long way. It didn't exactly make a huge move overall, but nonetheless, it obviously it closed right at the top of its range. So this was a bullish candle. And then of course, then we had this this major gap. And then it kind of went up a bit, and then it kind of went right into this area of potential supply here, and it took its time there, and then it kind of dropped out of this. So we can think of this now as kind of resistance. There's no longer any valid supply here. We can see price came up, it actually dropped out of here again, and so this is where we are now. So price could pull back to this demand zone, which has already been tested once here. It's possible that we could in fact see another bounce out of here. So this is right at the doorstep of this zone that worked once from right here. Okay, so that's one area of interest here. Then the next area of interest in the chart that we have with respect to the SPY is now down here. Okay, notice price drops here, and then we kind of have this pivot here. This is kind of either we can think of this as a bullish pivot here, and it's if we drop this down into a 1-hour zone, we would see a consolidation and then a pop, and then notice these two very bullish candles. So this is an area of fresh demand here. Okay, the fresh demand is characterized by an exhaustion of sellers here. So right here in this area, in this narrow range for a couple of candles, let's say for this day, or let's say 2/3 of a day, price kind of stayed in this region. And then notice right here, price really rockets out of there with a great deal of bullishness and energy. This represents an exhaustion of sellers here. Okay, where buyers and sellers were in agreement here, all of a sudden the sellers essentially left the building here. And in order for these trades to occur, willing buyers had to run up the price chart until they encountered willing sellers. And so what we have here is, if we think of buying as demand and shares that are available, that willing sellers that are there as supply, right in here, supply and demand are in balance. And then right here, supply and demand went out of balance. And so that's what happened over here. So essentially, once there's no supply left in this region where there was supply and demand, you're left only with demand in this region. Consequently, we refer to this as a demand zone. The same thing happened right here. Supply and demand were in balance here, and then they went out of balance where there was this gap, and then it went further. Okay, so what happened right here is, again, an exhaustion of sellers. The sellers just disappeared, via because of some change in perception. And then essentially the only time people were willing to sell, or institutions were willing to sell, they were willing to sell up around 442, where previously they were willing to buy and sell at 438.5. Okay. And then when price returned to this region, that's how and why we got another bounce, because this was an area of demand in here. Okay. And so that's that whole concept of supply and demand. Okay. So what we had here was this area again of where supply and demand were in balance, and then they go out of balance. Okay. And so that's the That's the story here. So right down here, there's a demand zone, and that's only about 1.25% down. That's about 5.5 points from where we are from the close here. Okay, and then below that, then the next kind of clean area of demand is about 2.25% down, and this is actually a daily zone. So, if in other words, if I change this into a daily chart, we would see this would kind of clean up, and this would represent an area where, again, supply and demand were in balance, and then there was an exhaustion of sellers here, and that essentially price that basically buyers ran up the price chart until they encountered willing sellers, and so that's how these trades occurred. And again, the expectation is when price falls to, let's say, this level, we would then expect to see a bounce out of here. And of course, before that happens, though, it's quite likely that we would get a bounce out of here. So we can see these are two very closely adjoining levels here. In fact, this is some people refer to this as a level on a level. This is a lower time frame level. This is only like a 1 or a 2 hour level, and this is, again, this is actually a daily demand zone right here. And so that's what's below us here. And then if we're looking above, though, and let's just say price turns right above here, this was an area. If we look above, so we talked about this area already. If we go back in time now, we look at where that dashed line is. This takes us back over. This is about like 15 months ago. This is actually in April of 2022. If you look at the axis down here, okay, this isn't this kind of double top here. We can think of this as kind of some resistance here. This was supply. Price returned in here. Notice now how that very bearish move that came out of here, that probably chewed up a good deal of the supply that's in here. So even though we got this very energetic move out of this level, there's no saying that that's going to repeat itself. And in fact, quite often when you get a return to the level and price is really dug into the level like we just saw, the next time it comes back, more often than not, price will tend to drive through here. So in fact, we don't really think of this as an area that's going to necessarily hold price down. If in fact if we get a turn out of here, if price comes back and, let's say, either bounces off of here or here, once it starts to go up, it could very well drive through this level here. So I would not be thinking about it. I would be looking at this as a potential impediment for a bullish trade, but I wouldn't necessarily be looking at this as a level where I would either short or express a bearish trade. Okay, and if we so the next place that we really kind of see, and there's really no clean demand here, or excuse me, clean supply. In fact, here's our definition of supply again. This is an area of expected future downward price pressure. Okay, and that, again, we saw that the consolidation in the range, then we have in this case an exhaustion of buyers. Okay, and then that's followed by the energetic bearish move. And so that's what we saw earlier. So if we now go back in time and we're looking at this, notice I marked this here as a point of a zone of resistance. And again, that's not fresh supply. And if we go back here, you'll see why I say that. And if we go right back here, notice right here, price came down. Okay, notice it sort of consolidates here. Then we have that shot down here. Notice price comes back, and a couple of times we actually then got a bearish bounce out of here. Once a bit, and then once, quite a bit more. Again, we generally, the first time it returns to the level is generally the best situation for us, because every time price returns, it tends to chew up whatever's there. In this case, it's chewing up the existing supply that was here. So notice price came back here again, okay, and then essentially, kind of pierced this level, didn't really violate it extensively, but then it sort of crept down from here again. I would not expect this to be a quality level up here. This is an area of supply right here, but price has already been back here. So I would not expect really anything to hold here. So again, if price comes up, there could be room for the SPY to run here. We'll obviously see if other intervening levels form. But then if that's the case, but now going back here, these are really the next areas of kind of clean supply. And so if we look right here, Notice price comes up, rallies, and then kind of creates that top and that consolidation. So this is a clean area of supply in the 2-hour chart. And then right here in the daily chart, this is another clean area of supply. But we can see those are actually a fair distance up. Okay, so if we look at the distances here, and we look at these lines that I have plotted here, we can see that area of supply up here is about 8% away. And then and in terms of the blue region here, that's about 7.5%. So really, there were no clean areas of supply till about 7% up or so. And then we have a couple of areas of resistance that are above here. We tend to find that those are less reliable. So from a bullish perspective, that could be good if we end up starting to get, if price bounces off of one of these demand zones and then starts heading up. So we'll keep an eye on all that. If we take a look at the Qs, the Nasdaq 100 index, ETF, again, kind of somewhat of a similar analysis here. Here is where we closed at the 366 or so. Right here again, there's that analogous level of what we were looking at in the SPY. And so we could see this is, kind of on the doorstep of that, a couple of points above. This could very well work again because price just barely kissed this level the first time and bounced off. I'll kind of show that to you. I'll blow that up here a bit. So notice price came up, consolidated. Then we notice that gap. Okay. Then it kind of just again consolidates and goes sideways. And then it kind of just gaps right back down into this level. And then notice we then got to bounce out of that. It's quite possible that this level might hold again. And the reason I say that is because there was very, very limited contact, right? This thing more or less just kissed the front level to the penny and then bounced. Consequently, really, if whatever demand was here was really not chewed up because it really never went into this level. So if this level was good the first time, it's quite probably going to be good the second time. So we're going to be watching this, particularly in the Qs. But we'll also look at the SPY, because if the SPY just kind of drives through its level like a knife through butter, even though this is a valid demand zone in the Q, well, the Qs, we generally like to see confirmation between the two indexes. So we're definitely going to keep an eye on that, though, in terms of the demand side of here. And then if we look on the supply side, right here, we can see right here, there was an area above here, about 3% up, about 11.5 points. If we then take a look and we go back in time. Okay, so right here, there was a drop, a base, and then a drop here. We have not been back there since. And so we'll be looking to see if perhaps this might be a source of a bearish trade there. And then after that, there is another area of supply that's about 5% up. Okay, and this is really the quality level. Okay, and this actually, if you recall the SPY, this kind of looks almost like exactly what the SPY chart looked like. So this is an area of quality supply here. So we'll be looking for this. This is definitely supply here, but it's structurally, it dropped here, but then there was a bit of a pause there. So this is a more of a clean area here. So that's what we'll be looking at on the Qs. And if we take a look at the bonds, here we are on the bonds here. So the bonds actually kind of lay out kind of very cleanly here. So right here we have this is where we closed right here. So if we get a rebound up here, about 3% up, this is an area where we would be looking to express a bearish trade here at around the 102 area, 102 region. And that's about 3% above where it closed here. And then right below here, there's an area about 1% down. And if we take a look at that, and we just drop back in time here. Sorry about that. Let's try that again. So we go back in time and we go right to here. Right in here, this area where there was a drop, a base, and a rally there. This is an area where we might expect price to turn. So that's at around the 98 level there. So and that's only about 1% down. And then if we go back, and then we go back a little below here, here's another level down here, and that's about 4.5% down. And so if we go back here, that's another area right there. So this is another area where we'd expect to bounce. So this is where we'd be looking for the first bounce, and then if that one failed, this would be the next area that would represent an area of demand. So at any rate, that's the story for for our sector analysis, as well as looking at the SPY and the Qs. I will leave you though with this. If you found this interesting and helpful, I invite you to take a look at our the description page where you found this video. First of all, if you would subscribe to our channel, we'd appreciate it. Give us a like, and then also there is a link there, and I would be happy, and we can schedule a brief call. I would be happy to tell you a little bit more about Precision Trading Labs, the whole supply and demand concept, as well as talk to you about symbols of interest that you might look at, and I can kind of show you how I would analyze that using that supply and demand lens that I just got through describing. Also, Precision Trading Labs, we are now actually working with subscribers where they are actually working towards earning a funded futures account through a sponsoring company, and we actually have a program in place to help them with that. So I'd be happy to tell you about that as well. So at any rate, thank you very much for the privilege of your time as always, and I will see you next time. Take care.